If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to break down the current news cycle. We're going to talk a little bit about the JOLTS jobs numbers. Some big jobs numbers came out today, a little bit better than expected. We'll give you a latest update on the Iran war, and we've got a trade idea in Bitcoin that's coming our way as the sort of the early June chaos in cryptocurrencies ensues and continues. We've also got some questions out of our How to Trade community on a few short-term charts that I'm more than happy to pull up. We're going to look at the U.S. dollar, Canadian dollar, and also the Kiwi, the NZD, USD. So I want to welcome everybody back to the live streams. We haven't been back, I guess, live here for more than a week now. Did a little bit of vacationing, or more of a work trip, but some vacationing. Had a lot of fun. I'm over in Amsterdam. Took a look at a lot of good food. A lot of great agriculture, or not agriculture, but architecture, and then also got a ton of steps and got a lot of exercise just walking around that city. So absolutely a lot of fun. Good to be back here. A little bit groggy. The pollen levels in Amsterdam were huge. They really got on top of my sinuses. Starting to feel pretty good, though. My guess is we're probably running at about 85 or 90% today. I'm guessing we'll be back at 100, 110% tomorrow. So I want to welcome everybody back. If you have any questions at all, any markets you'd like to see, be sure to reach out in the live chat, either on YouTube land or here in the How to Trade Trading Room. Good to see you out there. Packamp, always a pleasure, Packamp. Happy new month, Shane. Yeah, June's an interesting month. I always see June as being maybe the storm before the calm, meaning that typically when we roll into our summer months, July, August, things can get really slow. I'm looking for fireworks here in June, at least through the first half of June, and we'll sort of talk about how to trade the summer markets and get our mindset right for the next 90 days, and we'll talk about that in the coming weeks. We have time. That's the beauty of this. We do have time. So good to see you pack up out there in YouTube land. We've got an active room over in the How to Trade community. Good to see everybody back. Gordon Williams, pleasure, Gordon. Bobby Bob, hi, Coach. How was your holiday? It was good. It was very, very good. Long plane ride. The last on the way home, it was a bit of a chore to stay awake. I was looking at about an eight and a half hour flight from Amsterdam, the airport Schiphol, which is absolutely brutal. If you've ever been through there, I was reaching my limits of frustration flying out in the morning there. It was really a mess, but about 8.5 from there to Minneapolis here in the United States, and then about another 2.5 to Missoula from Minneapolis, and then I had to drive home yesterday, which was about another 3.5 hours or so. So a lot of highway, a lot of fatigue there after all that travel time. It's great to be back in the office and sort of getting back down to business, which is what I like to do best, is trading and be in my office and figure out exactly what we need to do to succeed. So I'm definitely excited to be back, that's for sure. So that was good, Bobby Bob, though. Thank you. Tuku, welcome back. I sure appreciate that, Tuku. Thank you. Let me see, Bobby Bob, when you're away, I managed to keep profitable. That's fantastic. It's fantastic, Bobby. That's what this is all about. Just be strong in the markets. Essentially, that's all you can do. Approach them from a position of strength. So it's absolutely fantastic news, Bobby. Thank you. Ralph H., welcome back. Good to see you, Ralph. Always a pleasure, guys. T. Marina, welcome back. Thank you, T. I sure appreciate it. If you guys have any markets you'd like to look at, let's go ahead and throw them in the live chat, and we'll get up and running. All right, we had a question right away, and it's sort of we're a little bit late to it, but the idea was a 5-minute U.S. dollar, Canadian dollar. I believe this was Gordon, potentially holding a short here. Depends on what your profit target is, okay, number one. But as far as holding a short, I have a real problem holding a short right now because that swing high has been wiped out. Sort of had that bullish pennant where you got the nice big rally, and then we got some compression, and now we're headed higher. Remember, the one thing that the U.S. dollar, Canadian dollar is highly correlated to is crude oil. So right now we've got crude oil is up. However, it hasn't been as strong as we've seen it this spring lately, and now you're starting to see this dollar CAD move higher and higher and higher. I think this would be a real tough one to be holding shorts on the 5-minute time frame. But if you are, just stick to your guns, stick to your risk management, 1 to 3% on a given trade, and then if you have to take a loss on it, you just take the loss. The first loss is your best loss. As far as where would my stop loss be, really depends on when I entered the trade, but for a 5-minute short, I'm thinking probably if I was looking at maybe taking that Bollinger Band short or something like that, I'd be out. I'd be out just because the market's breaking against me right now, and the last thing I want to do is get caught with my hand in the cookie jar and lose a fortune on a trade that the U.S. dollar, Canadian dollar has been very difficult to trade. No question about it. The correlation with crude oil is very, very, very difficult to put our finger on right now. Even though we're up on the day, crude oil's up. That should be a bearish market driver for the dollar CAD. We're not seeing it. We're not seeing it right now, and the reason why is we're off of those intraday highs in oil, and things are starting to turn in this market. So be cautious, be cognizant of what you're doing. Don't just let it get away from you. So I hope that helps, Gordon. As far as what we have here with the Kiwi, NZD USD daily, you see we had a nice compression. This is really great stuff down here because you do have just a crisp value area. Nice value area there, and then the market explodes to the top side. So for me, this would be a relatively simple read. Spike low to your spike high right there, something like that, and then potentially get bullish, maybe above 59.31. However, right now, very, very, very tight. So I would be watching yesterday's low very closely. Your low right there is 59.11. If you do get that breakout to the downside, be ready for a break potentially beneath 59. But that's a long ways away. Very tight, very, very tight type of a session here for the Kiwi. So I would be cautious. Don't get overwhelmed with it. Take it easy. One thing I will point out, though, is let's say if you're short here on this U.S. dollar, Canadian dollar, essentially you're playing the Canadian dollar. And if you're long on this Kiwi U.S. dollar, you're playing the Kiwi against the U.S. dollar. If something happens with the USD, that's called double exposure. That means if the dollar goes crazy, you're either going to win both bets or you're going to lose both bets. For me, I like a little bit better diversification. However, the U.S. dollar, Canadian dollar has a mind of its own, so I don't hate it. I don't hate playing that one along with your other majors as well. I think that it's a pretty good indication of what we're looking at in the broader economic sense of what's developing today is the dollar CAD. Dollar CAD's all about oil. And as long as we know that, we can make our trades accordingly and have a pretty good chance to succeed or at least limit our risks. That's what I'd look at. Kelvin, good to see you. Kelvin, welcome. Yeah, I'm glad to see you're back. Glad to be back, Kelvin. It was a long out there on the road. That's a long time to be out for me, about a week or so, a little bit over a week here, being out of the United States, being out of Montana's, it's not too terribly long, but boy, I don't know how some of these folks travel for a living. I don't know if you guys were Bourdain fans, big Anthony Bourdain fans. I was a big Bourdain fan, and I do not know how that man spent as much of his life on an airplane as he did. I'm not real big on airplanes. My patience goes in a hurry. It really does go in a hurry. But, if you like to travel, that's fantastic for me. I like to travel and see new things, but I find my patience, I certainly hit my patience level in that last morning in Schiphol Airport in the Netherlands. My patience was gone. I was getting to the point where, man, if I could drive home, I would drive home. I'm tired of these airports, but it was good. Everything went smoothly, and it was just a fantastic opportunity to go. So I'm very happy to be back, though. Very happy to be back, Kelvin. It's good to be right back in the office. All right, let's get down to business. We do have a trade idea out that I want to cover because it's coming our way right now. Bitcoin plunges, macro support in view. You can see we have a monthly Fibonacci level right down there, right around 65,000. This has been just a terrible month already for Bitcoin, and we're 2 days into it. We're down 8.5% in 2 days. Oof, man, it's not getting not a good thing. A couple of observations that I would pull out. Number one, we got some great bids off of that February low. That could come into play again, though. Sort of a real tight month during the first full month of the U.S.-Iran war. There it is. Then April kicked in. Life got a little bit better for crypto holders. And then we got a nice real rally. A rally that had many of us believing we were going back up to that 100,000. And then we just pivoted off of 82. If you remember that trade, that was just a great trade we had on that short, which was one that I was very happy with. It took us a while to find it, but it was very good. And you can see we went right up there to our 62% and then just plunged from there. So that was one of those trades. Maybe we didn't take enough points on it. I don't worry about it. Once the trade's over, I don't worry about it. I don't care anymore. And so when I'm looking at this, I'm saying, okay, what can we do now to maybe make another pretty good trade? Well, we can play the sort of the bottom end of this wave. This monthly, on this May monthly, sort of looks like a hammer. It's not a perfect inverted hammer. It's not really, I wouldn't say a perfect hammer formation, but it's not a bad one. It's a little bit, that body's a little bit too thick for me to really lean into it and say, oh yeah, it's a hammer reversal. For that inverted hammer, you would be in a bearish situation to take the short. But I really liked what happened underneath May's month. We just washed that thing out. Low there was 72.39, and now we're just right down there about 67, and it's getting worse seemingly by the minute. As far as Bitcoin goes, a lot of people are still long-term bullish. And I think it's hard to argue with the bullish side of this market, at least for the next year, 2 years, or probably until the Trump administration's finished. Then the game may really change for Bitcoin. Remember, one of the top holders of Bitcoin, aside from a few hedge funds, is the United States government. And anytime a government's holding Bitcoin like that, you know that the impetus is going to be to deregulate and to let these markets grow as unfettered as possible. Well, when you have something like an Iran war or something kicking off, all of a sudden U.S. sovereign debt, government debt is just swelling to levels we've never seen. Does that mean that these Bitcoin maybe start getting liquidated at some point? I don't know. I don't know what's going to happen there. That would be the bearish side of this. For me, still fairly bullish, but the confidence is leaving town. I mean, I believe that we're going to go up to 100, 125, maybe 150 and higher, but I couldn't tell you what year it's going to happen. Does it happen this year? I mean, Bitcoin hasn't done anything since we saw the major sell-off towards the end of last year and to begin this year. So for right now, I'm just more than happy to trade this thing. I think that we got an opportunity potentially to take this bid right around 65,000. I believe I have 65,000. Something like that would be your entry, 65.1. If you want to be aggressive, maybe 65.250. And we're looking for just a nice 2,000 bounce right off the 65 zone, maybe right up here to 67 and a quarter. That'll give us a great shot there to make a couple thousand pips. I like it. We've had a lot of success trading Bitcoin this year on our trade ideas. So this is the first one since I've been back. We put that one out earlier this morning, and it's coming our way. It is coming our way. As far as what would my management plan be, I'm looking for about 2,000 out of this. $2,000, and typically if you're trading Bitcoin on a CFD, that's essentially $1 a pip. Some of them are a little bit different, but this one is $1 a pip is $1 of Bitcoin USD per pip is pretty much the valuation. So if you're going to dial down your leverage, you're going to have to take a 2,000 pip risk. I would say that's a pretty healthy risk. Our stop out point would be somewhere right around 63, maybe just beneath 62.50, depending how exactly this thing shapes up. But for me, I'm looking for that bounce. I want that nice, tidy bounce off a downside support right up in the guts of that 62% level. I would love a retest of 62% to the top side. I just don't know that we get it. So for right this minute, we're probably just going to have to sit tight and wait for our entry. I don't like to say hope. Hope's for children and losers. If you find yourself hoping, you've probably already lost. But what I'm looking for right here is a nice bid, a nice bounce off of 65,000, and that's going to give us a pretty good shot to win. I would love to get it today. I would love to get it today, tomorrow maybe. I think that would be optimal timing for this Bitcoin trade. As far as what else we've got going on in our U.S. indices, just a quick recap. Since I've been gone, we had that 51,000 level now. The Dow Jones Industrial, these indices just keep jamming and jamming. Consumer sentiment here in the United States is at an all-time low. You've got government debt exploding. You've got gas prices huge. We've got a lot of angst, and that just doesn't matter. The markets keep going up and up and up and up. This reminds me of this is Japan. This is 2012 Japan, 2015 Japan, where devalue the currency, try to get these big market rallies. And as long as your markets are way up high, you can sort of argue that the sovereign debt, the debt against your country, isn't that big of a deal because your country's worth so much. Your stocks, your assets are worth so much. It's called inflating away debt. And as long as you have a lot of money, you're in good shape. Or as long as you got some hard assets, you're in good shape. Right now, folks holding cash are really getting hit, and they're getting hit hard. So Dow Jones Industrial Average up 51 at a time of war. S&P 500 just cracked on above 7,000. I mean, there really isn't much here to analyze. The markets are just up and away. We are going to go to the NASDAQ here in a second. NASDAQ's up above 30. You'll remember I went on and on and on about the NASDAQ being right at around 30,000. And you can see what we had here with some daily compression and then a break. Well, I do want to unpack sort of what happened at this level just real quick, and then we'll move on to any other markets you guys want to look at. We'll, of course, fire up the crude oil, maybe look at some gold. But what we had here was a pretty good hit of 30. Nice big rally right up to about 30,043. And then we had a significant reversal there. This is a 30-minute chart. That's a 90-minute reversal down to about 29.8. So there's just an absolute ton of volatility that came across the board the 26th of May. Then we sort of crept higher and higher. We got up here to about 30,300 and then just crashed. And since then, we really had just a seesaw battle right around 30,000, and the market's just broke. It's broke again.
You're moving higher. There's no point even really arguing about it anymore. Intraday trade for today. Take a look at where we're at here with this NAS 100, US 100. Spike low here, spike high here. Late day trade, what am I thinking? Now, it's not a trend day up. It's not a trend day up. We're looking at the market saying, okay, we're up 0.32%, 0.5%. These aren't trend days, but these are bullish days. This is what I would call an accumulation day. The orders hitting the markets are bids. And as they hit the markets, we're moving higher and higher and higher, even though the volatility itself, maybe not so great. It's not hugely volatile today. It's been an interesting U.S. session. You can see since we kicked off, the U.S. session came right off of lows, and then it just sort of ground up. It's been sort of a challenging market environment, but it is bullish. It is very bullish. So when we're looking at maybe trading late day, something like this, you're looking at 30,550, 38% retracement. Pretty good hot zone. You've also got a 13-period EMA right now is right around 30,559. So if I was looking to make a late day trade potentially, I'm in the US 100, maybe a scalp, that would be my zone. So where could you line that trade up at? Well, you got to be a little bit more conservative than laying 9 points. I think that's asking a little bit much, but I would probably be right in there. Probably right in there, 52.50, 30,552.50. And the way I would place that trade, I was go up to trade, turn on my paper trader, the broker simulator, and then what we would do is just go right here. Let's see, hit trade again. Order, buy, limit. This would be 30,552, 30,552.50 potentially, and there'll be a limit order, a buy limit order, and you would go ahead and let's see, units. I don't know exactly how the CFD is printed, but one US dollar. Let's go with 10 per tick, see what we can do there. Something like that would be the trade. Now, as long as this swing high stays in position, you got a chance to bid that. You got a chance to bid that with a lot of confidence late in the day. Remember, in and out, very, very tight trades. You want to just hit this as almost a tick scalp. My take profit, maybe, well, I mean, you can see our leverage is huge, but maybe just something right around 59, maybe 60. That's a pretty good profit target, about an 8-point move. That could happen very, very, very fast. So I'd be watching that closely. It's coming our way. It's coming our way. All we have to do is get a 60-point sell-off, and we'll be in business. So I really like trades like this, especially with the timing. Remember, the uppercase P formation. I've talked about this an awful lot. And then right there's your move, there's your run, and there's your rotate. That uppercase P formation that's in the English language, that formation is very bullish. It's very bullish. Now, it doesn't necessarily mean that we're going to take a position here and try to get in on a trend that it's going to move, to the top side by a couple 100 points. We're just looking for a late day trade. We're looking to get in. We're looking to get out. I would love the trade not to take any longer than maybe a minute or two. And I think if the timing's correct, then we'll have a chance to get that done. That'd be a pretty good trade, though, for a Tuesday especially. Tuesdays, I like Tuesdays. I'm a big fan. Big fan of Tuesdays. All right. I am interested in this Bitcoin trade, though. It is coming our way. We'll sort of keep that NASDAQ going, put a pin in that. We've also got a trade, an interesting situation developing on the U.S. dollar Japanese yen to the top side that's absolutely explosive. I mean, really explosive. And that's one of those moves that I've said, man, where did this come from? We're going to look at that one in just a second as well. Week 23. Weekend news cycle is going to be your Monday headliner. From now on in, unless we have a major, maybe a Trump speech or something happening on a Monday, we're just going to assume that unpacking the events from the weekend is going to be the number one market driver in finance. And I think that's absolutely accurate. I think we've been looking at the Iran war as being the number one issue on Mondays. No question. No question. Tuesday, JOLTS jobs numbers. That was the big headliner today. That's going to be our fundamental of the day. We're going to recap the JOLTS and see exactly what's happened. Wednesday is going to be the EI crude oil inventories and the ADP employment report. A lot going on tomorrow. I want to see the 30-year mortgage rates. I want to see the EIA inventories and that employment report. That's a big one. That's a big one. So I'm really interested to see what that ADP looks like. Let's see, Thursday, initial jobless claims. Only reason why I would even write this down, initial jobless claims, is because we have NFP Friday. If we have NFP Friday, U.S. non-farm payrolls, then we've got to brace ourselves and be ready for anything from the employment sector is going to be very important. So even our initial jobless claims, our weekly reports, that's going to be big. That's going to be big. So watching that one as well. And then NFP on Friday is going to be this week's headliner. I'm going to have all those scheduled. We're going to be going live tomorrow and Thursday at this time. And then Friday, we're going to have NFP live for you. Be sure to tune in. We'll do some live trading, see if we can get maybe a couple strategies going like the 920, which we're going to look at in just a second. Remember, Tuesday, Wednesday, Thursday, psychology. It's all systems go. You want to be trading on a day like today. A lot of action in the market, a lot of participation. A lot of folks are very excited about trading really everything. I'm seeing the participation there. And what that means is it's good market depth. All right? Mondays can be really slow and chaotic. Sometimes you get big moves on Mondays, and that's great. For me, I always say that's for somebody that's smarter than me to get those big moves on us on a Monday. For me, I want to see the ranges set up. I want to be interested in what's going to happen as the week progresses for Tuesday, Wednesday, and Thursday. That's my own game plan, but you can trade anytime you like. For me, this is my mindset. Hit our weekly P&L goal, aggressively trade our plan, cash in on the opportunities. If the strategy says trade it, we trade it, and then we ride the momentum. Remember, Mondays for getting momentum going, Tuesday, Wednesday, Thursdays to ride the wave and make money, Fridays to preserve the momentum. We don't want to give back much on a Friday if we can help it. That's no donation Friday. We'll cover that when the time comes. But this week, we're not going to be in that mode. We're going to be trading NFP. So it's time to build the account. That's what this trading journey and what this trading discipline is all about. It's about knowing when to trade and when to get after it and when to sort of hold your water and hang back and wait. It's been a challenging couple of months. I've talked to a lot of you. A lot of you have really struggled. I can tell you that I marked my leverage down from what I was doing in January and February. I marked it down significantly since the war started. I don't think that's wrong. However, we're seeing things get back to normal, and I think it's time to get back on the horse and sort of I'm going to be moving my leverage back to where it needs to be here within the next week. I want to see the first week of June in the books, and then it's going to be time to trade again. The reason why, those ranges, daily ranges, smaller, the action's not as chaotic. It's getting to be time to trade again. So we'll be watching that as well. So it's all systems go today. Here's the news of the day. Jolt's job openings. Jolt's job openings came in at 7.618 million. That's a lot of jobs, right? 6.860 million was expected, and 6.887 million was the previous release, which was revised up. You can see when these are green, that means there was an upward revision to the previous release data. These are for April, so we're still a little bit behind. The biggest thing I would say is that take these with a grain of salt. They look pretty good. Take them with a grain of salt. NFP Friday is the big one. That's what we want to really focus on. And if we're going to be investing and taking chances and risks, probably should be based on NFP as opposed to the Jolt's job openings numbers. All right, here's the official report from the U.S. Bureau of Labor Statistics. Job openings in the U.S. increased by 731,000 to 7.618 million in April 2026, the highest since November of 2024, and well above market expectations. So it was really a staggering read to the top side. A lot of folks are really excited about this one. I'm going to put this all in perspective for you. Don't get too excited about it. It's not great. Even though it's better than expected and the highest we've seen since November of 2024 is out, it said, or last November 2024, 2025. Let's have a look. 2024. So this is a strong read, the strongest for what, about the last year or 18 months, excuse me, something like that. All right, fine. This is a good look at this number and what it really means. COVID, clearly. COVID craziness, and then these numbers exploded. The reason why is everybody was essentially refiring the economy after shutting everything down. But since then, and this is what's really concerning, I'm seeing this trend in a lot of these economic numbers, and it just looks to me like nobody wants to talk about it. I mean, really, nobody wants to talk about this stuff, and I get it. We're tick scalpers. We want to get in. We want to make money. We want to do all these things that it takes to be a successful trader, and I'm in, believe me. Nobody wants to get in there and get dirty with these markets more than I do. But when we see something like this jump off the chart, we say, okay, what does this look like? What does it look like? Well, it looks like a mess. It looks like this right up in here has been just steadily in a downtrend since 2022. Now, the only thing that I would say that gives this Jolt's job numbers a little bit, not street cred, but gives it a little bit of optimism and positive sentiment is that you have returned to the pre-COVID levels. Now, if you remember, with our sentiment numbers, we were not even close to the pre-COVID levels, not even close. So a good 10-year cross-section of the data, I would say things maybe finally getting back to normal here for the job market, the Jolt's jobs. What happens with AI coming across the board? I don't know. I think we're in an interesting position. Let's go ahead and take a look at the actual report. You can see this is an official government statistic. U.S. Bureau of Labor Statistics puts this out, and you can see we've got all sorts of charts and goodies here. I didn't really see much that blew me away as far as a headliner here, but those are the latest numbers, 7.618 million, and you can see latest hires rate up 3.2%. Latest total separation rate, I really couldn't even tell you what that is. Latest hires, though, that means that hires are up significantly, and that's good news. It's not great news. Excuse me. It's not great news, but it's good news. So definitely we're going to be watching this, excuse me, as we roll in to the U.S. non-farm payrolls numbers on Friday. Okay, excuse me. Our other event is going to be our Iran war, and then we're going to get into some Forex pairs here. With sinuses, boy, get off an airplane after being on one seemingly for 2 days. Good Lord, got a little sinus infection going, excuse me. All right, the Iran war. So what can we really say about it? It seems like one day it's on, one day it's off. And when that is the case, it's really tough for us to make any prognostications about where we're going to be next month. There's no question about it that this is I personally believe that we're going back in. I think you're going to see this escalation probably occur here within the next several weeks, although Trump does not want to fire things up again. He really doesn't. You can see by the hesitance to really start launching the strikes. But this right here, Iranian officer says renewed war with U.S. seems inevitable. Israeli strikes in southern Lebanon after pulling back with threat to Beirut. I mean, it's just a mess. Right now, it looks to me like you're going to see renewed hostilities by the end of June. Now, whether or not we get a final resolution to this war anytime soon, I really couldn't tell you. This is something we're going to talk more about tomorrow and the next day as I get a little bit more, I would say, in touch with the current news cycle. But honestly, I was watching it all on the trip, and I was talking to folks that were in the Netherlands and that were in airports all around the world, essentially, and I was just asking opinions and seeing what everybody had to say about it, and it just wasn't conclusive. Everybody pretty much believes that this war is not over, and the markets, the volatility index is 16, so they believe that it may be over. We just got to wait and see. All right, we got a couple more markets to hit. We got some. I got way behind on the live chat, so nothing's changed after a week out or 10 days out. Let's see. T Marina. Indeed, I was stunned when I saw what the U.S. dollar Japanese yen has been doing. Yeah, it's a great one, and we're going to go look at that right now, T. Pack up Lamborghini, Euros type of leverage. Lamborghini. I don't know. We'll talk a little bit about money and leverage here in a minute, and just a few of my observations that I saw when I just being on the road. Okay, so right here, U.S. dollar Japanese yen 4-hour chart. This is one of those that I really favor. The 4-hour chart on the 920 EMA crossover. I've recommended it to a lot of traders that are looking for a place to begin trading Forex. Look at that. There's your buy signal on that dollar yen. There it is. It's back on the 25th of May, and you're down there about 158.98, and you're up about 200 pips. That's great stuff. Let's go to a daily. Let's see what's up on the daily. Fascinating. That was the 30th of April. Big sell-off there. Haven't really been knocked out of it yet, but it's over. I mean, this market's reversed completely. There's sort of your daily bid. You could have had a daily bid right there. This is a really good point on this 920 EMA crossover. What do you do with a bar that big? Do you ignore it or do you trade it? It's really hard. A lot of times when I get a bar that big, I do one of two things. I either wait for this market to pull back before getting in, because I mean, realistically, if your sell's down there, you didn't make much money, especially on a daily. And also the size of the bar. Remember where we're putting our risks. Remember how we build these trades. So if you're down there, your stop loss has to be somewhere like that. It's got to be. So that means it's going to put you in for a bigger move, and you're going to be taking a bigger risk. Is the trigger bar, is the signal bar important? It's very important. If you get an elongated signal bar like that, I probably would be leaning towards passing. I really would. Something to think about there if you are trading the 920. And then when you flip it around, I'm trying not to cherry pick winners and losers, because it just isn't what trading is about. But something like this, you're looking at this saying, okay, what about that? Well, it's a really small bar, very compressed. That tells us that the market was calm, but directional, no question about it. I mean, since these lows established back on the 6th of May, we're way up. We're way up. So how would we trade it right now? Well, it's a challenge. I mean, it really is a challenge. Let's go down I don't know if we might get our trade here in just a second. I'm going to keep that open. Dollar yen. Interesting, right? You've got that double top. This is a 5-minute chart. Very tight for this time of day trading Forex. I would probably be looking at a minimum of a 30-minute, something like that. But you can see what's happening with the price action. No question about it. What do you think the big level is here? That's a big one. 160 is a big one. It's a huge one. Let's go down to a monthly, see what's up. Okay, there it is. So if you're trading yen right now, a couple of things to be aware of. Number one, 160. Absolutely. Have it on your chart. Understand what that is and what it could possibly do to price action. That's number one. Last couple of times up there, we haven't been able to sort of establish ourselves above 160. Something like that. And you've got a swing high right there. Your swing high coming into play at 160.72. That's key. What about this? What about this action over here? I actually remember this. We were live. That was sort of the end of the big bullish run in the dollar yen, and now we're back up there. What is happening with this pair? We've got the United States, the USD, Kevin Warsh, the new Fed chair. We're going to cover it later this month live. His first engagement with the Fed. What can we say about this pair? This was one that I was bearish on. It was bullish for years. It was very simple. The BOJ lost ground against all the majors. Excuse me, Great Britain pound, euro, US dollar, you name it. Now, we were looking for maybe that to reverse. We were thinking the BOJ has been talking about hiking rates and reducing their balance sheet, maybe trying to strengthen the yen and hamper inflation that they see as being a major catastrophe, being at catastrophic levels. I saw Warsh coming into the Fed as being a potential dove. Finally, Trump was going to get the rate cuts that he always wanted. So that potentially would be the fundamental, catalyst for driving this market way down. It sort of looked like we were beginning to get that, and not now. Not now. Inflation in the United States is as bad as I've ever seen it in my lifetime. No question. It's as bad as I've ever seen it. And what we have is a situation where you're probably looking at rate hikes as opposed to rate cuts. And that dynamic, it's all predicated upon the U.S.-Iran war. That is the driver of our interest rate expectations. And let's just look at them real quick. I'll just show you exactly what I'm talking about. This was something that we thought we were going to get massive rate cuts this year. That's what Kevin Warsh was put in there to do, was deliver rate cuts. You can see that right there. We're not going to get anything in June. I actually don't even care. Let's take a look at what happens at the end of the year. All right, what do we have here? We're hiking rates. Now we're pricing rate hikes. Excuse me. When we started out in January, I had us going way down to about 2.5%, maybe 2.25%, maybe 2% for the prime rate, just because we were going to get rid of Powell. That was before the war. Now the war is here. Inflation's as high as we've ever seen it. This right here, when we start hiking interest rates, that derails all of our expectations with regards to the yen. As soon as the United States starts hiking interest rates, that means you're going to see a real strong domestic currency against pairs like the yen. So that right there, nice compression. Keep an eye on these levels. No question about it. 160 is a big one. That top right there, 160.72, your yearly high that was established in April. That's a big one, potentially topside resistance. And this one right up here, that's another big one, 161.95, up there right around 162. So when we start approaching 162, I'll definitely be writing up a short trade idea. I think that's going to put us in a pretty good position to succeed. But as far as what are we seeing right this minute, we're seeing Katie bar the door. I mean, it's just bullish, 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 bullish. People are bidding. And going back to that 4-hour chart, even that daily chart, the 4 hours is the one that I really like. It's a good trade. That's a really strong trade for just about a week's work. That's a pretty good trade. So I'm watching this yen closely. 160 and then 162. I really wouldn't even look to step in and be a serious aggressive seller until we get to 162, somewhere up in there. I think that could definitely be the way to play this one as we move forward in time. That's for sure. Let me see. We got some questions here. But yeah, I'm going to go ahead and answer. Let me see. Kelvin, I'll answer your question. And then we have one Australian dollar, Japanese yen. Absolutely. Let's go ahead and put it on this on this 920 EMA crossover and see what it says. All right, still the same basic type of thing. Boom, there it goes. The yen losing significantly against everything seemingly. Excuse me. Okay. Big round numbers. I'm a big fan of them. I'm bad on pronunciations though, so I'd be Jotha. I'm looking at 116 as being just a massive level, somewhere right in here. That would be it. 116 flat. That's a big one. That's a big one. Take a look at this. I mean, getting your way back machine, and we're pushing all-time highs here, and it's happening regularly. So even though that's a monthly chart, we have a pretty good concept of what level is going to be a big deal. Now, here's the thing. It's a bullish pennant. It really is a bullish pennant on a monthly, which tells us that we're not just going to break a little bit high. We're going to break a lot high. And if that is, in fact, the case, then we're going to move very, very, very swiftly up above some of these key levels. Excuse me. Man, I'm about done talking today, guys. Sorry. But this area right here, we've broken out of that inside month, and now we're moving higher. I would look for short-term resistance up there right around 116. If you're interested in trading this thing, you probably are going to want to be long, maybe holding long. So you can see, though, this is a big-time zone, the big-time area right up above the upper Bollinger Band. If you wanted to bid this right now, be patient, wait for a good trade location. The last thing you want to do is chase price around the chart. If you do that, you're going to lose. But something like this, 114.30, maybe something like that, would be a pretty good trade. 114, maybe 114.35. If we could get a little bit of a late day correction or a early Asia Pacific correction, maybe we move up a little bit higher, something like that, and we could build our Fibonacci sort of in that vein. I think it could be pretty good. Pullbacks. I would be looking to buy pullbacks right now because this market is definitely breaking out. If we don't want to use the daily chart, let's take it down to a 4-hour chart and see if we can get a Fibonacci to work with. I would avoid it right this minute. This candle's not real. The symmetry of the market's sort of gone. If you wanted to bid 114.65 and you had to get active in the market for maybe a challenge or something like that, you could do it. It's just higher risk. I would wait for a bigger move. Maybe even down here to 114.50. I would like that a lot better. Or maybe even just our level, our big key level down here at 114.31, something like that. Could definitely be the way to approach this. Good question, though. That is definitely a live market and one to be looking at. The yen is all over the place, that's for sure. All right, we're going to have to come back. We'll cover precious metals tomorrow. Honestly, silver's in rotation around 75. Gold, not really much happening. A dead fish, flat market right around 44.83, right around 4,500. We still haven't got the big move out of gold up to 5,000 yet. I believe it's coming, but maybe not this summer. We just have to kick back and wait. The big story of the markets right now is equities. Equities are up across the board, and that is really something. That is really something. Let's get back over to our NASDAQ 100. Do we have a trade yet? We might get a trade here in a second. We'll let this one simmer. This is the one we want. This would be a pretty good late day scalp if we could get it. Once again, I mean, it's always a challenge when you're in the markets and you've got a nice level. We've got the level. We just have to be patient. And if we do in fact get filled up there, you want it in realistically the next 20 minutes. You don't want to trade that level on the next 30-minute bar, even though this is a 30-minute chart. You want it right now. We want this bar to be overextended and then get our bounce. That's what we want. We're right there. We're right on the doorstep. 30,557. We're looking to buy at 552.50s. Pretty aggressive. You can see our moving average is playing well, but the market's still trading down a little bit. I think we've got a chance here potentially to get this trade. I'm going to go ahead and just wait a few minutes and see if we can get it and answer some of your questions in the meantime. Okay. Let's see. Kelvin, do you have any advice for a funded account? Yeah, take it slow. Take it slow. You worked through your evaluation period. If you're talking about prop, you worked through it. You worked your tail off. You developed habits that are conducive to success. What you don't want to do is put a lot of pressure on yourself and go in the first day or so and blow your account out. and then you have to start all over again. I don't recommend doing that. Get in there, take your time. Treat the beginning of your funded account like a Monday, like how I would treat a Monday. Slow, get some momentum going, build profitability, and then move forward. That's essentially what you want to get done there. Do some things that just maybe take some smaller profits. Build the account. Begin building the account by going positive. You'll find that that'll take the pressure off of you. If you can do that, then you're going to have a fantastic opportunity to succeed down the stretch. And I think that's what we all want is success. If you go in very aggressive, I can tell you stories. The very first funded account I ever got, it was with Top Step Trader. They were the only prop firm back in 2012, 2013 that wasn't a brick and mortar outfit. Online space, it was pretty much just them. And so I worked my tail off, and I passed it took me a month, I think, to sit in there, and their rules were very strict. And it took me a month to pass it. And I got in there in the first day in the markets. I ended up losing like $500, which, is a lot when you can only lose $1,500. So I made that mistake, but I fought back. I fought it back to even within just 36 hours or so. But it really hurt me. It set me back because I just never got out in front to the point where I could start making some money and looking for payouts for quite a while. And it all was because I went in the hole on that first day. Then I had to be super cautious. I had to scalp, work my tail off just to get back to even. And it just wasn't much fun. Keep it fun. Keep it fun. That's for sure. Get well soon. Yeah, I'm feeling pretty good, guys. I'm not sick. This sinus stuff, the allergies, the trees are popping here. So I'm in a little bit fatigued, still a little bit jet lagged after that Sunday trip. But I'll be good. Probably good to go tomorrow, the next day, I would think. Like I said, we're about 90% today. We'll be 110% by Thursday would be my guess. Let me see. Pack, I've been watching the U.S. dollar, Canadian dollar, waiting for great setups. That's what it's all about. Wait for your A-plus setups. Let's see. Saad, hello. How are you, Saad? Let me see. We have another question. Lamborghini is your type of leverage. It's funny being from rural Montana. There's some money here. But when you go to a place like Amsterdam and you walk around and they start talking real estate and how much those really tall townhouses are worth now, like $20 million to live in a city. I mean, you could buy a pretty nice ranch out here for $20,000, or $20 million. Those things were $20 million for one of these big townhouses they have type of things in Amsterdam. Blew me away. Could not believe it. I said, wow. The houseboats, believe it or not, the houseboats themselves that were located on the canals, not much to look at. I don't know. Maybe you want to live there, maybe you don't. But the piece of canal frontage that the houseboats had, these were like $1 million, $750,000. I sat there shaking my head and I go, wow, it's a crazy world. There's more people out there with Lamborghinis than you think. I'm not one of them. That's for sure. Let me see. We have another question here, and then I'm going to go ahead and sign off. Ralph H., do you recommend risking a percentage of the drawdown or of the total account when trying to pass a prop challenge? The drawdown. The drawdown's everything, Ralph. And what happens is when you get into a prop, the way that I'm just going to shoot you straight. The way that they sell prop is they say you've got a $250,000 account. You have $1 million account. It's not true. You have a drawdown. So let's say I get a $100,000 account and my drawdown's $3,000. If I go down more than $3,000, I lose the challenge and I'm not able to trade and I'm not going to get funded. So the only thing that really matters is your drawdown. Now here's the thing, and it's a sneaky little trick that a lot of prop firms do. Most of them do, but what they'll say is, okay, you've got a $100,000 account, so that money you've got enough leverage to trade, 10 lots of crude oil or 10 lots of S&P 500 or 15 lots, but you can only lose $3,000 or something like that, 3,000 euros, whatever. It means that those big leverage trades, you miss one or two of them, you're probably going to blow your account out. So what I always recommend is risk a portion of your drawdown. Now here's the thing. Here's the thing that you probably should be aware of, Ralph. If I say 1 to 3% of like a $3,000 account, clearly that's not going to work. it's not enough of a risk, and you'll have to take way too many trades to beat the challenge and get funded. That's the biggest thing I want everybody to remember is it's just a challenge. So if you're spending a lot of money on these challenges, I would say, yeah, don't blow it out in 5 trades, but be aggressive with it. But a lot of these challenges and these funded accounts and things, these prop, I guess they're just called challenges, challenge accounts. They're cheap now. And so you can't really look at it like, okay, I'm going to risk 1 to 3% of my account like we're trading cash, because it doesn't really work that way. You're going to need to make some money. And if you have to make 3,000 with a 3,000 drawdown, then can you do that trading 1 to 3% of your balance of your drawdown? No, you can't. You're going to be there forever. And I don't recommend that. Typically, I'd like to see, getting in there and saying, okay, I got 3,000 to work with. The best ones are the static ones that don't have the dynamic drawdowns. We've talked a lot about that, where they draw down off of your high points of your trades. That's terrible. I mean, that's really difficult to beat. I've had those experiences where I've made money on my prop challenges, and I just to be stopped out and say, oh, you violated the rules. And I go, it's a stupid rule. I'm up $2,000 and I violated a rule because I let a trade go. That kind of stuff is the game. It's where the gaming aspect of your markets come in. That's where the challenge. I mean, a lot of these prop firms and challenges essentially think of them as video games. I mean, let's cut it. I mean, most of the money now is fake. It's just digital money. It's virtual dollars, which doesn't matter to you, because if you're a good trader and you rack up those dollars, the firm honors them. So I wouldn't worry too much about that. But what I would worry about is making sure that you don't invest a year of your life working through one challenge or something like that. So I would say be more aggressive. Personally, the way that I would do it is, let's just use the $100,000 account, and I would have 3,000 to work with. I would love that to be a static, but if it was a dynamic account, the first thing I would do is be aggressive out of the gate and try to rack up 500 or 1,000 in profits without giving much back off of the dynamic drawdown. And then I would look to get aggressive from there and just try to accomplish it within a week or two. Now that's if it's not expensive. And there's some challenge accounts in the United States that are very cheap now. So you don't necessarily have to, if you're only risking $50, that really is what it is. $50, $100 maybe, $30. That doesn't hurt you. What hurts you is if you're $500 for an account, then you need to be careful. The number one tip I can give anybody for passing challenges accounts, and I've done it, we might do it later this week. If there's some specials out there, might be fun just to play some trades and see if we can knock it out in a day or two. The number one thing I would recommend to everybody is just get off on the right foot. Don't dig a hole. Wait for your premiums, and then when you see a premium trade, go after it and really work on your game to not necessarily to try to achieve your challenge in 1 day or 2 days or something like that, but just get in there and make sure that you don't go into a hole. Because if you lose, let's say you lose half of that 3,000, how much do you realistically have left in you? What do you have, another 2 sessions, 3 sessions? You want to play on the plus side of the ledger. You always want to be moving forward with good momentum. And that's why the challenges are hard. That's why it's all hard, is because it's so easy to dig a hole and make a big trade and, oh, I lost it, and now what do I do? Maybe chip away. Do some tick scalps. Rack up 500 or $1,000 profit, and then get aggressive and look to put it over the top. Anything you can do to improve your, I guess, not necessarily leeway, but your margin for error, do it. And, of course, the static evaluations are the best, the ones where you can just take positions and let them run without any movement off the high water mark hurting your odds of passing the challenge. So, I mean, there's a lot there when it comes to prop. That's for sure. All right, everybody, I'm going to go ahead and sign off, unfortunately, and this is trading right here in a nutshell. We're all over this trade. This is beautiful. And the NASDAQ, we knew exactly where to hit it. What was our low? Low right there was 30,554. We were down there at 552.50. So we just barely missed, and now we're back up to right around 30,600. That type of thing right there. Darn it. That type of thing right there where we just barely miss our entry, that's a part of trading. And when it happens to you in the live market or on your accounts, don't worry about it. Don't worry about it. That's part of doing business. We don't worry about the trades that we miss. We worry about the trades that we take, the trades we execute. Your profitability as a trader is really going to hinge from how well you execute and manage your positions, not necessarily the trades you miss. Believe me, if you worry about the trades you miss, you're going to drive yourself crazy. Worry about the trades you take and execute. All right, everybody, that's enough for me today. We'll be back tomorrow. I'm going to get the live stream schedule out here momentarily in the next half hour or so. But we will be NFP Live is the big one Friday. And then tomorrow we're going to be looking at the same time, about 1 o'clock Eastern, 1 p.m. Eastern, and then also 1 p.m. Eastern on Thursday as well. Those are going to be sort of our picks to click. That's when we're going to be going live this week. We're going to be talking more about summer trading, getting back in the saddle after a vacation or any time out of the office. It's typically a good idea to take a day, take 2 days before you really start assuming big risk. That's exactly what I'm doing, trying to get the feel of these markets. All right, everybody. Thank you very much out in YouTube land and also the How to Trade community. If you guys need anything else, be sure to reach out and send me a PM over at howtotrade.com. I will get back to you directly. As always, well, man, it's been a while. As always, trade the action well, and we'll talk soon. See you.
A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers